a lot of companies reporting that are going to give us clues on whether or not we're in a recession or heading towards a recession imminently. And I'm going to be tuning in. You should too. These are vital earnings charts and earnings conference calls. They're in all areas of the economy, representing the consumer to oil. So these are some of the keys. What are they? Let's find out. So the first company is Lithia Motors. LAD is the ticker, and they are auto retailer. And as you can see, they put together 9 beats in a row, many of them big beats here after the pandemic started. Now, we all know the issue with autos and the prices of both new and used cars are through the roof. That is helping earnings revenue for the auto retailers. But everybody thought 2021 would be peak earnings and that, oh, the consumer, they all bought all the cars they needed during the heart of the pandemic. And now they're back riding the train or the subway. They don't need to buy the cars anymore. But there still is consumer interest in buying new automobiles. And the sales haven't really declined. And so last year was not peak earnings, at least not for Lithia, because earnings are expected to be up another 20% here in 2022. But what's an investor to do? They all sold it or started to sell it in 2021. And now we've seen a little bit of weakness here in 2022 again, but everybody's kind of just pausing and waiting to see like what's going to develop as the year goes on. Year to date, these shares are only down 5.4%. Even with this fear of the peak earnings, and they're dirt cheap. I'm talking a PE of just 5.9 and a PEG of 0.9. They also pay a dividend yielding 0.6%. So where are these auto retailers going to go? Was it peak this year in 2022? So there's only one place to go, and that's down. Or is the consumer going to surprise even into 2023 and continue to buy cars? These are the issues. Nobody knows. So these shares kind of just holding here for most of 2022, but could break down once the consumer starts to break down, if they do. So all these auto retailers are going to be really interesting this quarter because we are heading into the back half of the year now. They should have some good insight onto consumer behavior, at least for this summer. So this is one I'm going to be watching and kind of the first of the auto retailers to come out during this part of earnings season. Then we're going to switch over to another critical area, home building. D.R. Horton, DHI, is reporting this week. They are one of the bigger of the home builders. So they're going to give us a national picture on what is happening. Now, we did hear from Lennar and KB Homes just in the last couple of weeks, and they said they've seen some slowing. It depends on which market. They've, they're not doing as much of the holdback in certain markets anymore. They are still seeing quite a bit of foot traffic and online traffic, but that was only 2 weeks ago, and things are changing quickly on the home side. So what is happening here with DR Horton? Their last miss was all the way back there in 2019. So they did not miss during the pandemic, even with the uncertainty at the start of the pandemic, where nobody was certain anyone would really be out there buying homes. But then they had the super hot streak. The shares peaked in 2021. Then everybody concerned about rising rates. And rightly so, the shares have come down. So year to date, down 32%. That's normal with the home builders when rates rise, mortgage rates. But is it done? It's bounced off those lows there around $60. And is the worst already priced in here? So DR Horton trading with a PE of just 4.3 and a PEG of 0.5. So the estimates have come down a bit. And fiscal 2022 earnings, though, are expected to be up 50% because they have that huge backlog. It's mostly priced in. But what will happen next year? Will they adjust what they're seeing, in their backlog and in new orders, all of this, what will happen. So DR Horton, key on the home builder side. Then we're going to switch over still with the consumer with Tractor Supply, ticker TSCO. If you don't know them, they are a rural uh, retailer, super popular. They don't just sell the tractors though. So the name is kind of misleading. They sell riding mowers, however, but they do sell things like hay, seeds, other things you need to live a more rural lifestyle, but they also sell apparel. Just they're one of the bigger box retailers out in the rural areas. So they're always a good sign on what is happening out there outside of the big cities with the consumer. And as you can see, great earnings surprise track record during the pandemic of meeting or beating. Shares have come down this year, but not as much as some other retailers, down only 14.8% because they have been executing. And so people are giving them basically the benefit of the doubt here. PE still remains bid elevated at 21 times, but earnings expected to be up 10% this year. But that's if the consumer is holding up. Is he or she holding up? I don't know, but this is one I'm going to be tuning into to see what they say about guidance, what they say about the second half of this year, and what is happening in the rural areas with the consumer spending. Then we're going to switch over to another area that's nationwide and worldwide, Domino's Pizza. So restaurants. As you can see, they've missed the last 2 quarters. That's a little rare for Domino's, but again, their costs picture has been really skyrocketing, both on the labor side, but also on the food side. So they're getting hit at all directions. And these shares down big here in year to date, down 28%, but they are off those May lows there. They were down as much as 42% year to date as of May, but they've had this slight rally up 7% in the last month. But is this just a relief bounce here with more to go, or is the worst over for Domino's too? PE still remains elevated at 32 times with a PEG of 2.8. So earnings expected to decline about 6.9% here in 2022 on these inflationary pressures. But what is going on with the restaurant side, especially on pizza? That's kind of a low cost item, at least through Domino's, where you can order out and feed your family for not as much inflationary pressures as some other areas. So have they been able to push through any price increases? What is the consumer doing? All these things are in play. I'm going to be tuning in to see what is going on the restaurant side. And then we're going to wrap it up outside of the consumer with oil. So Schlumberger reporting SLB, they're on the oil services side, but global oil services company. And as you can see, outstanding earnings surprise track record, a meet or a beat every quarter for the last 5 years, including the horrible oil industry conditions in 2020. All of that is impressive from their management. But the Schlumberger shares were already out of favor going into the pandemic. As you can see, pandemic drop was just kind of the end of that sell-off. And then we've had a nice rally off of those 2020 lows until this year, where suddenly the shares have pulled back. Year to date, they're still up 7.9%, but over the last month, they've fallen 16%, giving maybe a buying opportunity for those who did not get into any oil services companies yet in this part of the cycle. PE is at 17 times, but the PEG is just 0.4 because the earnings growth is expected to be high. Earnings expected to be up 45% here in 2022 as the global energy complex ramps back up on the reopening out of the pandemic. And so oil services are in demand. So again, is this sell-off overdone that has just happened in the last month? Could be, but we're going to find out more when Schlumberger and its competitors like Halliburton report earnings. all this week, and then we're going to start to get the big oil and the producers themselves. So this is one to watch if you want to see what is happening out there in the energy complex. This is key, Schlumberger SLB. So as you can see, it's quite an interesting mix of companies that are reporting this week. As I said, we're going to get a lot of clues as to what is happening out there with the consumer, whether or not there is a recession imminent, or if we're in one, at least from the consumer point of view. Are they pulling back already? The banks have been saying no, but these consumer type companies will tell us more. And we're also going to get the start of the energy earnings. And I know many people still aren't paying that much attention to energy, but with this big pullback we've seen in the last month, could be a buying opportunity here in many of the energy names. But we're going to hear more from them on dividends, share buybacks, what is happening with production. So you don't want to miss a single episode of the Earnings All Stars videos, because I will be bringing you an energy specific Earnings All Star video probably next week. So be sure to subscribe. Get us all of our earnings content at zacks.com/YouTube. Follow me on Twitter. It's just at my name at Tracy Reinick. But get us somewhere, and I'll see you again next time with some more earnings charts.